Hello again, everyone. It's Vince Four from TradeWinds.com, and this is our update for March 16th, 2017. Let's take a quick look at today's markets. Well, we saw a bit of a mixed close today for stocks, and it actually happened on lower than average volume. So not exactly the kind of follow through that we were expecting here after a healthy reaction after that Fed rate hike yesterday. So the Dow Jones Industrial finished down 15 points today. If we take a closer look at this, we did trade above yesterday's high, but then pulled back and gave up about half of those gains. So volume actually wasn't bad on the Dow, a little lower on the other index charts here. Let's have a look at the S&P 500. It did not even manage to trade above yesterday's high, and it traded lower by 4 points today. The Nasdaq did squeak out a gain very, very slightly, 0.71 higher. Again, did not follow through, did not trade above yesterday's high. And the Russell managed the gain of just 3 points and is right back at that downward sloping 20. You can see volume fairly light, about half of what we've seen the last number of sessions here. Now, if you look at TLT, that dropped back about 60 cents. Crude was fairly flat. Gold, though, on the other hand, saw a significant spike today. Huge gap here, up 25 points after that rate hike yesterday. And the reaction in the dollar, let's take another look at that. The dollar index chart, here's that reaction yesterday and more selling today. Now, before I let you go, I want to talk a bit about day trading. For those of you who day trade, one simple method that you can use is to look at the opening range. So whether we look at a 1 minute chart, a 5 minute, really doesn't matter. I'm going to zoom into today's trading on the 1 minute here on Tesla. So here's Thursday, zoom in, and what you want to do is wait for the first hour to go by. So we open at 9:30 Eastern, wait for until 10:30 Eastern, which is right about here, and then look back and identify the lowest point during that first hour as well as the highest point. And then just mark it and extend these lines across. So there's the lowest point, there's the highest point. And one simple thing to look for is a break out of this range, and usually whichever way it breaks out, it usually spends the bulk of that day trading back in that direction. So you can see here today, which was fairly quiet, here we moved out of this range, we traded above the high, came back, retested it and held, and went on a bit of a run, came back, retested it again, and went on another run. A couple of nice trades in there, and then of course we just kind of went sideways here. But look, any time frame, let's move out to the 15 minute and look back at a few days. So there's today's opening range. Let's look back at Wednesdays and 10:15, 10:30. So this bar here is the 10:30 bar. Again, very quiet yesterday, especially considering that rate hike. There would have been the range. Let's look at Tuesday. Here's Tuesday, okay? And here's the 10:30 bar right here. So we look back, here was the high, and here was the low. It broke out of the high, and it spent the rest of the day moving higher. And that's really more or less what you can expect more often than not. If you look at Monday, we did not even break out of those ranges. We just spent the day within the range, so you know you had no trade there. Same with Friday, but look back at last Thursday. Here's 10:30. Opening range would have been here, and you know, once we break below there, we spend the bulk of the day going lower. So it's something very, very easy. Doesn't happen every day, but more often than not, 2-3 times a week, you'll most likely catch it. And whether that's on an index chart, something like the SPYs or the Qs, or an individual stock, go back and have a look. Find one where it's pretty consistent, and you can easily take some of those trades. Again, the time frame really doesn't matter. Okay, that's about it for now. Enjoy the rest of your day, and we will see you on our next update.